Let me break down some of the common myths with life insurance for you. The two biggest ones being, one, isn't that for people if they pass away? Isn't that all it's good for? The second, well, that stuff's really expensive. Yeah, that's something that we can't afford. That's a really expensive premium, right? They think of it as a cost. And so I'm here to debunk those two myths a little bit. The first one, yes, life insurance is used for death. So your traditional life insurance has two options. You've got term insurance, which the only value to term insurance is if I pass away in a certain timeline. The only value to term insurance is if I pass away in typically 10, 20, or 30 years. I rent it's like renting an apartment. I'm paying my rent or my monthly premium. And if I pass away in 10, 20, or 30 years, I leave my family behind whatever that death benefit is. However, on the other side of the aisle, there's what we call permanent life insurance. And so permanent life insurance has some other nuances as well. It's got the ability to have death benefit for life. So no matter how long I live, it's going to protect my family. It's got this pretty interesting thing called cash value. So the money I put into it over time, it actually starts to build equity. And that equity, I like to refer to it as an opportunity fund. It's money that I can grow out and I can use it for, a down payment on a house, for additional retirement income, putting my kids through college. And so when it comes to permanent life insurance, there's a lot of different designs out there. Sometimes they're cash value focused, sometimes they're more death benefit focused. When you think about life insurance, remember there's two types. There's term and there's permanent. Once we get into permanent, there's a few different things going on there, and I would be happy to sit down with you and guide you through what might be the best type of permanent life insurance for you and your family to look at. So the second one is, well, this life insurance premium is really expensive. And I always tell people it's expensive compared to what, right? Well, is it expensive to put a lot of money into our 401k and have a lot of money sitting there at retirement? No, because that's a contribution. It's not an expense. So the first misconception is if we're putting money into a permanent life insurance policy that's focused around cash growth, it's a contribution. It's not a premium expense. Yes, there's fees and there's cost to doing anything. Even your 401k at work has fees and costs to it, just like a life insurance policy does. But it's a contribution in that case. If we're putting into place a life insurance policy to take care of long-term care needs down the road, and we think those premiums are expensive, well, what's more expensive? The couple $100 a month I'm paying on that, or the $15,000 a month for the nursing care for my spouse that I have to pay now? So it's always looking at it's expensive compared to what, and is it a premium or is it a contribution? Because when I put money away into other assets, I look at it as how much do I want to contribute to this? Not how much do I want to lose having to be stuck paying a premium, right? So a lot of it is the way that we view, one, the value of it, and two, what is the intended use of this? Because if it's to maximize our retirement, if it's meant to make sure that if I need care down the road, I'm not stuck with this massive bill every month, if it's got the right intent and purpose behind the use of these dollars and these premium contributions, then is it really expensive? Or is that one of many life insurance myths? When you think of an NFL head coach, what's the first thing that comes to mind? Super Bowl championships, working with elite quarterbacks. What about life insurance? Probably not. So I'm a big sports guy. I've shared, but I was a former tennis player. I played at UCLA. Now I'm a big LA Chargers fan, big Lakers fan. Right now it's been a tough year for the Lakers. Chargers, we're hoping, are better next year. But I've got a financial story that I wanted to share with you sports fanatics out there. So if you're listening right now and you're a Chargers fan, you're if you're a University of Michigan football fan, this is a great story for you as well. And if you like hearing interesting ways of how people are building out generational wealth, this is right up your alley too. So let me jump in here. Let's go back to the year 2016. So in 2016, you know who the head coach of University of Michigan was? Football program. It was Jim Harbaugh. So Jim Harbaugh is my guy now. He's with the LA Chargers. But Jim Harbaugh in 2016, he did something really interesting. So Jim Harbaugh, he sat down with University of Michigan, and he's one of the highest compensated college coaches at this time, and he's figuring out, how can I get a little bit more out of this contract, right? Just like he's on the football field talking with his players of how can I get a little bit more out of this team? How can we win a national championship? Now with the Chargers, how can we win a Super Bowl? I mean, we've got the talent to do so. I think we can. But Jim Harbaugh, he's sitting down with the University of Michigan, and he's figuring out his compensation structure. And what he figures out, and what him and the university decide in 2016 is pretty fascinating. So they decide to fund a massive life insurance policy for Jim. And so they offer him, they say, Jim, you know what? This is what we're going to do. We're going to loan you $4 million for 2016, and we're going to throw that into a life insurance policy for you. And then for the next 5 years following, we're going to give you $2 million each year into that policy. And it's interesting, right? I've personally, going into the financial industry, I've heard of some interesting things like Shaquille O'Neal, building out a lot of wealth using annuities, but I never heard Jim Harbaugh, his story exactly, and how it made sense. So Jim Harbaugh got this massive life insurance policy in place now, and some of you are asking, well, why this life insurance policy? Isn't life insurance meant for just death benefit for someone if they pass away? Why is the University of Michigan putting millions of dollars into a policy for Jim Harbaugh? And I'm, by the way, I'm not here to tell you guys you need to be like Jim Harbaugh, right? You need to go to your employer and tell them, hey, you know what? I'm glad that you're paying me a bunch of money, but on top of that, I need millions of dollars to be put into this life insurance policy for me. That's not the case here. But I do want to share with you the value behind why they agreed on that and why life insurance as an asset can be so valuable. So in Jim Harbaugh's case, number one, University of Michigan was able to lock him in to their program for a certain amount of years, right? If he stays with the school, every year he stays at the school, he's getting an additional $2 million into his policy. Okay? So from their point of view, we're keeping Jim Harbaugh around a few more years. From his angle, maybe there's some tax benefit. He's not taking all of his money in just direct income where he's paying taxes on it this year. But the huge other piece is he's creating an immediate legacy for his family. I don't know what the exact dollar amount was, but I'm sure 50, 60 plus $1 million in death benefit for his family. But third, Jim Harbaugh's got a huge bucket of cash value that's building inside of his policy that he has access to in retirement now. So when Jim Harbaugh turns 70, 75, 80 years old, and he's deciding where he should take $100,000 from an additional income that year, well, guess what? He's got millions of dollars in tax advantage cash sitting in a life insurance policy that he can borrow from at any point. And so the point of what I'm getting at is that life insurance is a tool that many individuals, wealthy, upper middle class business owners, that they utilize in their overall retirement plan. And you might ask, well, why not just put money into your 401k? Isn't that just for death? And the answer is, well, my 401k is growing for me, right? And it's a great asset, but when I pull money out of it, it's going to be taxable, just like a lot of my other accounts. My investment accounts, I got to pay capital gains tax on. I might not want to miss out on what I'm doing in the marketplace. The stock market's performing well. Why would I want to liquidate? But when it comes to my life insurance policy, just like Jim Harbaugh, it's growing every year for me. It's tax advantage, and I can decide at any point that I want to borrow money from my policy, and I can decide at a future date if I want to put that money back in or not. And so life insurance as an asset, it gives me options, it gives me liquidity. It helps me leave a larger legacy behind. And let me be clear, it's not the end all be all asset, right? We want to diversify our money. But Jim Harbaugh is a great example of utilizing life insurance to create an immediate estate for his family, increase the impact on his retirement income, to grow that and be tax advantageous with that piece of it, and also to be very strategic with his compensation, right? He's not having to maybe pay as much income tax on his capital. One piece that I'll leave you guys with is, say I get to retirement. Jim Harbaugh, I don't know how many more years he's going to play for, or he's going to coach the LA Chargers, and maybe it's another team. But let's just say 10 years from now, Jim Harbaugh is retired and he's 75 years old now, and he needs $300,000 that year for his retirement lifestyle for him and his wife and whatever else they got going on. And he's got two pools of money he can use. He can use his traditional retirement accounts that when he pulls money out of that, it's going to count towards his income, and he's going to have to pay taxes. And he's got his large 7 figures of cash he's built up in his life insurance policy, where if borrowed properly, he can take that money out with any tax implications, doesn't have to worry about, timing the market, and he can choose to put that money back into his policy or not. Full flexibility. Which option should Jim Harbaugh choose? And the answer is probably a little bit of both, right? Because we never want to have our eggs fully in one basket. Just like when we're taking out retirement distributions, we don't want to be having to pull from one asset alone in retirement. And so if you found this interesting, I find any sports stories around financial concepts, I find them very fascinating. But if you're a sports guy like myself and you found this story interesting, subscribe, leave a comment below. Would love to hear from you, and I look forward to having more sports stories for you guys. Thanks.